Um, I've been an independent financial advisor for about 21 years. I created my practice about 21 years ago with a national firm, and it's about 13 years ago that I started exploring the world of what we used to call socially responsible investing. And over the time, that field has evolved quite a bit. It's changed its name from what we used to call SRI to now RI, which stands for Responsible Investing, which is also called ESG investing. So tonight, my goal is to provide you with some level of education on this whole world of ESG investing, responsible investing, and what it means, because it seems that every day you watch the news, you read the paper, and you hear about ESG investing. So you say, this is so popular. Like, I've been in it for the past 13 years, and now it's like it's the fad, it's the flavor du jour. So I'm going to go through a presentation and explain what this all means. We'll have a period for Q&As at the end, and feel free to ask any question you might have in mind. Okay, so I'm going to share my screen, and you tell me if this is working well for you. Can you see at this point the front page?
Yes, it's good.
Okay, can you see me as well?
On the sidebar.
Yes.
Okay, all right.
Yeah.
We're good. So, and with this, you see both, you see me and the presentation?
Yeah.
Yes.
Perfect, awesome. Okay, so I guess the first thing we should do is what does it mean? What does RI mean, and what is ESG? So responsible investing refers to the integration of what we call ESG factors into the process of investing. So traditionally, when you look at professional money management, you look at fundamental analysis of investments that should become part of a portfolio. So when you are analyzing companies, you look at their financial ratios, you look at the ratios like the price earnings ratio, dividend yield, level of debts to assets, earnings growth. You look at the quantitative and quantitative analysis, looking at the quality of the senior management, and you make an informed decision about whether this stock belongs to your portfolio. So this is kind of the traditional approach to investing. It's about making money. It's really about making money for the shareholders. So moving from traditional investing to responsible investing means that above and beyond the due diligence that you go through, you will also look after the ESG factors. So ESG stands for environmental, social, and governance. Okay, that definition here that you see on the screen is the definition that the RIA Association came up with for the public. So RIA is the Responsible Investment Association. It's an organization that I belong to, and it includes a lot of people in my field, institutional money managers, financial advisors who care about it, and it's an organization that's gaining more and more in popularity. So what are ESG factors? So let's take a look at the first component. So environmental factors. So if you have a company out there, companies operate in different sectors of the economy. And the main question that we would ask to a company, regardless of where it is geographically or what sector of the economy it's into, we would ask that company a question like, what are you doing as an organization to be a better corporate citizen from an environmental standpoint? And that could be, depending upon on the field, again, that the company operates into, it could be questions like, okay, what are you doing to reduce your greenhouse gas emissions? And such questions like that. What are you doing to minimize your impact as far as your production is going. What are you doing to reduce your waste? How can you incorporate some recycling into your process? So how can you incorporate the circular economy into your life? So these are what we call environmental factors, and any company should have a scorecard. How do they rate from A, B, C, D, E? It's like when we were at the primary school. We had a scorecard, and everything was A, B, C, D, E. A is the best, E, it's the worst. So that's on the environmental front. On the social front, it's about looking at how you're dealing with your customers, how you're dealing with the populations, the communities where you operate. How well do you know your supply chain? How are you treating people? What kind of diversity of your workforce do you have? What kind of gender equity pay do you have? Do you have policies for these kind of issues? And I'll give you an example. Let's say, as an example, talking about the supply chain. So let's say you look at a company like Canadian Tire. So you walk into a Canadian Tire, or it could be Home Depot, it could be Kent, it could be any kind of store where you have a lot of what we call SKUs, a lot of products. You know, a SKU is a product number. Any product that you buy at a store has a SKU number. And that SKU number is supposed to allow you to trace where that product comes from. So if you're a company like Walmart or Canadian Tire or one of those, what are you doing to trace where that product comes from, who made it, how was it manufactured, and the companies that the subcontracting companies that were used, how did they use, how are they as corporate citizens? So that's an example of social factors. The third one is governance. So governance looks at things like how is the board compensated? You look at the top senior executives of an organization. We've heard about excessive compensation schemes that are completely ridiculous. If we go back about 40 years ago, the average CEO of a company earned about 50 to 100 times the average salary of the employees within the organization. And that number now is about 225 times. So, that's over a few decades. We had this huge gap in terms of the wealth, the distribution of wealth across the employees within an organization. Again, we're looking at diversity as far as the board, women, so gender equity, and also diversity in terms of ethnic diversity. So these are, at the bottom line, these are what ESG factors are. So when you look at ESG investing, there are different levels of ESG investing. It's almost like the Maslow pyramid, where you have at the bottom of the pyramid, you have the basic needs, and then as you go up the pyramid, you're looking at self-realization and so on. So there's also an ESG pyramid that we call it. So at the very bottom of the pyramid, or if you will, below the pyramid, you would have what I described earlier as traditional investment management. In traditional investment management, it's about making money. You do your due diligence to buy things that will make you money. So you go up one notch, and then you're talking about consideration of ESG factors. So, and this is where we get into the world of what I would classify as greenwashing, because there are now some products that, they say they're kind of labeled as ESG, but are they really ESG? So this is where somebody who has some knowledge in the field of ESG investing can make the difference between a truly committed ESG management versus one that is kind of doing it because everybody else is doing it. So going back to the bottom, so consideration ESG means that you are looking at some data. So you're doing the traditional way of investing, and then you order some reports from some third-party firms that are specialized in producing ESG scorecards. And you will look at it, you see, oh, well, okay, it's kind of a consideration. That's what it is. You're not really doing anything about it. Then we go to a little bit up higher, screens. So you can see here on the top, the second layer here, screens. So many ESG platforms will systematically screen out specific sectors of the economy. So typically what you will see companies that are involved in weapons, in tobacco, could be pornography, it could be gaming, it could be fossil energy. So there are some platforms that can exclude systematically these types of sectors. I would say the majority of ESG platform that we look at today will systematically exclude pornography, gaming, and tobacco and weapons. These are the four that we normally see, and then after that, you have some other screens. The next step up on the pyramid is what we call integration of ESG factors. So integration means that you are really truly integrating ESG factors into the management decisions. So you're not just considering it, you're really taking it seriously. One notch up is what we call shareholder engagement. And shareholder engagement, I would say, is closely associated with integrated. Because if you're integrating ESG factors into the process, you will also engage with the outside stakeholders. So as an example, if you're managing a very large portfolio for thousands of investors and you're taking ESG seriously, you will actually show up at the annual general meeting for the companies that you invest into, because you are representing thousands, if not hundreds of thousands of investors. So that's what large ESG institutional portfolios do. If they do a good job at it, they will actually engage a dialogue with the senior management of the companies they invest into, and they're well equipped with ESG scorecards, and they will engage in a dialogue to help them improve their own ESG scorecard. So if we have a company that's a B or a C on one of the subjects, we want them to upgrade to a B or an A. That's kind of the idea. And those companies that engage in shareholder engagement, they also produce a report, and everything that they do is measurable. So it's not just about talking. It's actually real action with results, and every year you can track the results on whatever issues they decide to tackle. What ESG organizations will do as well is they will work together. So if you have one pool of money that's worth 100 million with another pool of money that's 7 billion, another one that's 30 billion, and so on, well, now you're talking about a collective group of ESG institutional managers that are responsible for hundreds of millions or in the billions. And that's what we see today. So if you have a collective group of ESG institutional managers knocking at the door of the CEO of a company, you better believe that the CEO will listen to what they have to say, because ultimately, if all these large pools of money managers start offloading the stock, guess what? The stock price will take a hit and the CEO will lose his bonus. Okay, so money talks. We're going to go up also here on the pyramid, looking at impact investing and thematic impact investing. So this has to do with specific sectors where we want our money to be embettering the situation. So as an example, you could have a pool of money that's dedicated to the environment. So I'll give you an example of a fund that I know of that will engage in 4 themes. So one is renewable energy, one is waste management, one is agro-food production, and the other one is water efficiency. So behind these 4 themes, you have a cluster of companies, most of which are technology companies that are all involved in making these sectors more efficient. And what's interesting to witness is that in those sectors, the 4 sectors that I mentioned, the average earnings growth of these companies is about double the earnings growth of the wide index that we call the Morgan Stanley Acqui Index, which is kind of a broad-based equity index that looks at companies' profits. So you can invest and make money in things that will actually address probably the 4 biggest challenges that humanity is facing today. So population on the planet is increasing, and what are the biggest challenges? Food, water, energy, and waste. So that's an example of being positioned on top of the pyramid. So here you hopefully understand the scale, if you will, of commitment within the ESG world. So I mentioned engagement over here, and advocacy is the last one. So I would say engagement and advocacy are very similar. Advocacy mostly refers to ESG portfolio managers engaging and lobbying with the regulators. So at the policy level, to change regulation, to make sure that the laws that are voted and the regulations that are introduced are really encouraging an improvement on ESG factors. All right. So that's kind of a different way to look at the different dimensions of ESG. So you can exclude specific sectors. You look at the different ESG factors. You look at how intense they are with their corporate engagement, integration, and the thematics. There's something interesting happening in the world, and maybe social media has to do with it. You know, we often complain about social media, but it does have positive effects. One of the good effects is it gathers people like us tonight, but also it does affect brands. So you just go back 20 years ago, 30 years ago, brand was not as important as corporate balance sheets. So as far as the stock price, if you look at the correlation between stock price and corporate balance sheet, it used to be almost like 100% correlation. Now, reputation has a much bigger weight into the equation. So an example is you all remember the oil spill that occurred by Exxon. You know, the Exxon oil spill that happened on the West Coast. This is about 30 years ago, and when that happened, the stock price was only affected by about 4%. Well, guess what? Today, if this happened today, the stock price impact would be huge. We saw it with BP, with the oil spill that happened with BP in the Gulf of Mexico. the stock price was affected, I think, by close to 40%. So, but this is based on data. So that the brand, the reputation of a firm actually has a much stronger correlation to the stock price than before. So the companies know that, the CEOs know that. And here's some examples as far as how, you know, controversial issues that are directly related to ESG can have an impact on the stock price of a company. We saw BP Petroleum. We saw it with Volkswagen. You remember Volkswagen just not too long ago. I had a Volkswagen. I got the letter. I got the recall. Brought back my car. All of that was a governance issue. This was a company that said, you know what? We don't really care about the regulation. We're just gonna manipulate our software so that we can get by with the greenhouse gas emissions. Then he got caught. Guess what happened? Guess what happened to the stock price of Volkswagen? It took a huge hit. So some people sometimes think that if you're engaged, if you put your money in a portfolio that is labeled as a responsible investing or ESG investing or socially responsible investing, they think that the performance will be lesser. And in fact, it's the opposite. So there are now a couple of research. Morgan Stanley did a research. One department at Harvard University did a research as well on the correlation between ESG investing versus performance. And it showed that incorporating ESG factors into the process will not reduce performance. The performance will be equal or better. And it makes sense because if you're incorporating ESG, you're actually reducing risk exposure. And you're also aligning your portfolio, your money with your values. So you're taking traditional wealth planning plus ESG. Typically, you'll end up with better results, less risk, better alignment with your values, and hopefully equal or better growth for your assets. With the United Nations, there's something called the UN PRI. So the PRI is the Protocol for Responsible Investing. Since 2006, there's been a huge phenomena where a lot of large institutional money managers join and become signatories of the UN PRI. So now we've got about 2,500 institutional portfolio managers they've signed on to the protocol. And that represents a growing amount of assets. And you can see that growth is exponential. The flows, it's reflected in the flow of money. Canadians also are more and more interested on the subject. Some surveys recently reflected 77% of Canadian investors who wanted to learn about responsible investing. And it's reflected in the flows of money as well. So we've had a tremendous growth, about 48% of growth within that category of assets. So it's definitely a secular trend. So ESG can be viewed as an additional asset class, if you will, but it depends on how it's incorporated into the portfolio. And of course, we see all kinds of news. I was mentioning earlier how it seems that there's not a day that I don't see or hear about ESG. But just recently, we saw what happened in the US with the Biden election. Under Trump, the US had left the Paris Climate Agreement. And the first day on January 20th, Biden signed a decree whereby the US is rejoining the Paris Climate Agreement. There's all kinds of news every day. These are just examples. PEI is going with 100% electric buses. Laurentian Bank that adopted a reform as far as the compensation and also for gender diversity on the board. UK banning the sale of new gas, diesel, and hybrid vehicles by 2025. The Green Deals all over the place. Coming out of the pandemic, there's tons of money that has been introduced by the central banks, but on the fiscal side, huge budgets are being introduced to kickstart the economy, and a lot of that money is going into renewable energy and different initiatives to go a bit greener. So that kind of summarizes the whole subject, and I'm going to open up for questions.
Thank you.
Could you go back to the last slide, please, before the conclusion one?
For sure. Share it. Yes.
Hi, how are you?
Before the question.
I'm on a webinar. No. Yeah. Mm-hmm.
Slide before then, Marion?
Oh.
Margaret?
Yeah.
Please, can you go back one slide?
That's great. Just a minute.
Yeah.
Yes. Okay.
That's right, 30 rolls, $12. No, you sure can.
Johanna, might you mute your,
Am I muted?
mute yourself? No, you're not. Oh, you probably.
Oh, I'm
can't
sorry,
hear
I'm-
Your conversation, it's okay.
Now
Good.
I'm muted.
No, not yet.
Oh.
So Margaret, did you have a question?